Distinguished guests, ladies and gentlemen, welcome to the event today organized by the AoF on the subject of economic recovery after COVID-19 and beyond. Good afternoon if you are in Asia. Good morning if you are in Europe. I'm Casey Kwok, CEO of the Academy of Finance. Today's event is the result of a collaboration between the Bank for International Settlements and the Academy of Finance in order to promote the involvement or higher level of involvement of the BIS in Asia, and to have an informed dialogue on some of the important economic and financial issues of the day. I want to introduce you to Mr. Siddharth Tiwari, Chief Representative of the BIS Asian Office in Hong Kong, and to invite him to say a few words of welcome. Siddharth, please.
Thank you, Casey, and very warm welcome to you, Honorable Finance Secretary. Warm welcome, Eddie, this is your own house. And to the leadership of the financial community in Hong Kong. Augustine, I think you are online. Good morning to you in Basel, and a warm welcome to the several hundred participants who are joining us online from around the world, representing dozens and dozens of central banks. So when Augustine and I talked about his vision for Asia when I was coming here, there were two areas that we set our sights on. First was deepening our engagement in Asia, which was long overdue. We started our regional office in Hong Kong 21 years back, and this was the first footprint of BIS outside Asia. In the last 21 years, the economic gravity of the world has moved towards Asia, and in our own operations, about 2/3 of our deposits are from Asia. So the weight of Asia is growing. Technological change is changing the financial sector rapidly, and central banks are adjusting to the change, both from their own operations to looking at what kind of digital currency they issue. And that's impacted our own work. On the policy side, we've embraced the integrated policy framework, which is a new way of helping central banks deal with financial challenges. We opened two hub centers, innovation hub centers, first in Hong Kong and then in Singapore. On the banking side, my colleagues have been intensifying their efforts in local currencies in Asia. And together with our regional central banks, we are seeing whether we can make advances in green finance. And a couple of months back, we were very happy to welcome our newest member, Vietnam, to the BIS. Second, important part of my job is to learn from Asia, to inform others what they're likely to face. Asia is the harbinger of what is yet to come, ahead of the curve, and both we and HKMA and other central banks in the region can play the role of providing a global public good to the other central banks and what challenges they're likely to face. Finally, Hong Kong has been home away from home for many of us for 21 years, and for many of us, it is home now. And this could not have happened without the tremendous collaboration with HKMA. So thank you, Eddie, and through you, to Norman and to Joseph and to the government, and amazing collaboration. And with that, it's back to you, Casey. There you are. Thank you.
Thank you, Siddharth. We certainly welcome the BIS to keep enhancing their level of collaboration with Asia. Today's event is live streamed by AoF on YouTube and by the BIS on its website. As mentioned just now, we have, apart from the guests attending in this auditorium of the Hong Kong Monetary Authority physically, we have about 430 people signing up for the event online. And as you mentioned earlier on, Vietnam is now the latest member of BIS. We have also representatives from a bank of, the central bank in Vietnam signing up. I hope you are there. Welcome, our Vietnamese friend. And now I have the pleasure to invite the Financial Secretary of the Hong Kong SAR government, the Honorable Mr. Paul Chan, to give to us his opening remarks. Mr. Chan, please.
Eddie, Casey, staff, distinguished guests, ladies and gentlemen, good afternoon. And to Agustín, joining us from Basel, head office of the Bank of International Settlements, a very good morning. The 91-year-old Bank for International Settlements, collectively run by 63 central banks, including, of course, the Hong Kong Monetary Authority, released its annual economic report last week. Agustín, the bank's general manager, will address its central findings in just a few minutes. Without giving away too much, let me say that the report's introduction certainly caught our attention. It was led by the headline, "A Bumpy Pan Exit." That, I would say, is a telling summary of the global economy, which today remains under the influence of COVID-19. More than bumpy, it is distressingly uneven. That said, it is also surprisingly strong. China has been leading the economic way for the world. The GDP of the mainland, as the report notes, is well above its pre-crisis level. Hong Kong, I'm pleased to report, is also in good place today, thanks largely to a fiscal strategy built on supporting businesses and safeguarding jobs. Today, the government has injected more than $39 billion to support businesses, to keep workers and those in need. We also provide liquidity support to enterprises and the unemployed by way of government loan guarantee schemes. With Hong Kong's infection ratio among the lowest in the world, our strategy now is relaunching the economy and creating jobs. And the electronic consumption voucher scheme kicks in next month, distributing about $650 to every eligible resident in Hong Kong. That initiative, one among many, underlines our determination to boost domestic consumption and kickstart the Hong Kong economy. Beyond the short-term stimulus, we are committed to developing a more diversified and sustainable economy. Innovation and technology is central to that goal. And our overall strategy is to leverage on the development strategy of the mainland. Hong Kong is the only international city in the world that offers a secure, dynamic environment for business, and yet direct access to the mainland economy. And our country's 14th five-year plan supports Hong Kong's continuing status as an international financial center, a global offshore renminbi business hub, and an international asset and risk management center. You will hear more about this from Eddie later this afternoon. For now, allow me to thank the organizers, the Hong Kong Monetary Authority, the Hong Kong Academy of Finance, which celebrated its second anniversary in just 10 days ago, and the Asian office of the Bank of International Settlements, The bank has stepped up its collaboration with central banks in Asia and its Asian office, which is based right here in Hong Kong, together with one of the bank's 4 global innovation hubs. Hong Kong has much to offer in an open and multilateral system. We welcome the opportunity to collaborate with institutions like your bank, which offers both cutting-edge analysis and innovative mindset. Continuing innovation is the only way forward for the bank as for the Hong Kong economy. Working together, I'm confident we will realize our goals. I know you will enjoy today's dialogue, and I wish you all a rewarding and smooth pan exit. Thank you.
Thank you, Financial Secretary. As Mr. Chen has referred just now, the BIS Annual Economic Report has been released. It raises a lot of issues, both economic and financial, that central bankers and the financial services industry have to address to grab the opportunities and to deal with the challenges. Our next main session of the day is a dialogue between Mr. Agustín Carstens, General Manager of the BIS, and Mr. Eddie Yue, Chief Executive of the Hong Kong Monetary Authority. I will now pass the floor to Mr. Yue and Mr. Carstens. Thank you.
Thank you. Thank you, and good afternoon to everyone, and good morning to Agustín. Thanks very much for joining us for this AoF event. I thought this is a type of new normal that we should be very accustomed to now. You in Basel, me here, 40 people here, plus 400 something online from around the world. I think this will be the new normal that we will be living in. But thanks again for joining us. I think it's already for the second time that you're joining our AoF event. And this time, you're here to introduce the Annual Economic Report. And I should say upfront that I'm a very keen reader of the Annual Economic Report. Every year when it comes out, I almost feel like I learned something definitely from the report. So if you have not read it yet, I would strongly encourage you to do that. So without further ado, let me first invite Agustín to talk about the key messages in the annual report this year. Agustín, please.
Thank you very much, Eddie, and as always, it's a real pleasure to be with you, to have this opportunity to have this dialogue with all the financial leadership in Hong Kong, and in particular, I'm very, very, very honored by having Paul Chan to give us some remarks, very smart remarks. He did a very good job in capturing the essence of our report. And even though you describe this as probably the new normal, it doesn't have, from my point of view, it's not equivalent to be there. So I hope that very soon I can be in Hong Kong and join all of you, and of course visit our office in Hong Kong, and in a way continue celebrating this very strong collaboration from the BIS and the Hong Kong Monetary Authority. So without further ado, let me just go quickly to our annual economic report. As you well said, this is our flagship publication. It's where we concentrate our main message. Traditionally, we have a chapter on the conjunctural aspect, where the global economy is, where it might be going. And then we try to address a few key items that are important for the central banking community. And this year we chose the two very, very important topics. One is the relationship between monetary policy and income distribution. There has been a lot of talk about that, in particular in some advanced economies. And in addition, a topic where Hong Kong and mainland China, needless to say, have shown a tremendous innovation and capacity to work on, and that's central bank digital currencies. So let me just give you the thrust on each chapter, concentrating mostly on the first one. Well, I mean, as we all know, the events that happened last year were completely unexpected. It is once in a lifetime, or once in many, even probably hundreds of years, where, you know, the global economy comes to a stop suddenly. This was the result, obviously, of the pandemic, of the way to deal with it. And so it put the world economy into animated suspension. What was key at that moment was to have a very agile, very determined fiscal and monetary policies to support the economy, to bridge the situation to, I would say, a more normal situation, even though it's very hard still to define what normality means. What was of the essence was, at that point in time, to prevent a real shock and something that affects in particular the real sector of the economies, not to mutate, now that we use that word quite more often, into a financial crisis. And that was probably the main objective for central banks. Therefore, a very, very accommodative monetary policy was implemented. Something that was of the essence is that firms that were facing liquidity issues would not perish in the weeks and months after the onset of the pandemic, and make it through more normal times. And that's why financial support was of the essence. It's not only sufficient to have lower interest rates, but also to have financing. And for that, fiscal policy was also of the essence. Fiscal policy supported by increasing expenditure, but also very importantly by providing backstops to banks and even central banks, absorbing credit risk and allowing credit to flow to all types of enterprises so that they could make it through this difficult period. In addition, also fiscal policy was of the essence to provide support to households. 1 year after that, I would say that the results have been quite positive. If you had asked me a year ago that we would be in a situation as we are today, I would say probably it would have a very low probability. Therefore, I think that what we have seen up to now is very, very effective, very promising. A key has been the vaccination. I think that has reduced substantially uncertainty and the capacity to fight the pandemic. Also, I have to say, many countries have made tremendous progress in learning how to live with the virus and implementing policies that, as time has moved, they have been less intrusive and less impactful on the economic scene. Now, as very aptly Paul Chan mentioned, one of the characteristics of the Pandexit is that it's not even. It is very heterogeneous. This was a crisis where we all went together, all the countries went together, but they are exiting at a different pace and with marked differences. We have been fortunate, I would say, that we have the two largest economies leading the pack, pulling the rest of the economy, of the global economy. So, of course, it's mainland China and the US. And that has had a very significant spillover effects on the rest of the global economy. I would say that very determined fiscal and monetary policies in both in these countries has been remarkable and has played a very important role. Now, what determines the different speed of recovery? Well, first of all, the monetary and fiscal space that each country has is not the same. We have seen already that some countries have needed, for example, to tighten their monetary policy because their local circumstances do not allow a more accommodative policies. The fiscal space is more limited in some latitudes than other. The capacity to fight the pandemic and access to vaccination has also been an issue. And another thing that is very important is the structure of the economy. We know that some sectors have been affected more than others, and that certainly has played a role. Therefore, as we move forward, we will see this differentiated recovery. It will be very important for each country to identify in which way the authorities can better support the recovery. I would say that as we move forward, fiscal and monetary policies will be reaching to their limit. I mean, we cannot go forever with such accommodative policies. At the same time, the I would say normalization of those policies should be very, very gradual, should be very well transmitted, and in such a way that we don't generate a cliff effect and that the recovery is threatened. Now, this brings me to a key challenge, which is in this environment, how can we establish a recovery that is sustainable? And I think here we need to look into also structural issues in the economies. We cannot depend forever on fiscal and monetary policy. Structural policies to make the economies more efficient are of the essence. Here I'm thinking not only about more spending in education, health. I mean, certainly the example of Hong Kong on innovation and in education and health is remarkable. But, you know, we should also take advantage of the challenge of climate change to try to find investment opportunities that would lead to more sustainable growth into the future. Immediate risks, we are dealing in different latitudes with some bouts on inflation. This is a result mostly of relative price changes, supply chain disruptions, base effects. It's very hard to think that after the lockdown and so on, there won't be a relative price distortions. Therefore, what we think at the BIS is these spikes in inflation are transitory. What is key for central banks is to keep their eyes on inflation expectations. So far, the ones in the middle and long term are very, very well anchored, and therefore that means that we are sort of in the right track. Towards the middle run, it will be important also to watch the relationship between fiscal and monetary policy in such a way that the independence of the central banks are fully preserved and they are effective. So far, we don't see any threat there, but I think it would be important to reassert the lines, the distinctive lines between fiscal and monetary policy. But Eddie, I have talked a lot, and this is supposed to be a dialogue. So let me shoot back at you and ask you a question. Sure. Of course, I'm extremely interested in dwelling deeper on what Paul Chan-min mentioned, which is the plans that you have all in developing further Hong Kong as an international financial center. So if you, for example, would look into your crystal ball, could you please tell us how do you see in the next 5 years the role of Hong Kong in light of the developments in terms of the outlook that we have for the global economy, and in particular, how do you think you can leverage on technology to achieve your goals?
Thank you, Augustine. Yes, this is supposed to be a conversation, so I'll do my part. I don't have a crystal ball, but I'm pretty confident about the status of Hong Kong as an international financial center going forward. If you think about a city as a finance hub, basically you're talking about two requirements. One, a very strong ecosystem, which we have. The institutions that we have here, strong legal system, bilingual workforce, etc., things that you are familiar with. The second thing that we need apart from the ecosystem is a set of opportunities, the right opportunities for our institutions. And this we can sum up in just 3 words: China, technology, and green. And by China, we're really talking about connecting the mainland and the international financial market through Hong Kong. Well, we have a unique advantage here. Think about it. We are the only city which is part of China, but at the same time, fully integrated into the global financial system. So our role is clear. And we have actually started this journey already through the various Connect schemes, the Bond Connect and the Stock Connect. If you're an international investor, you can use these Connect schemes very easily to get into China's capital market. And we will very shortly add 2 more members to these Connect families. One is what we call the southbound leg of the Bond Connect, under which mainland institutional investors can use Hong Kong to invest into global and Hong Kong bonds. And the other new family member is the Wealth Management Connect, under which mainland individuals for the first time can use their wealth to invest in global asset management products through the Hong Kong channel. So we actually see that momentum continue. And in terms of turnover, in fact, we are seeing a lot more capital, international investors wanting to get into the Chinese capital markets. If you look at the turnover in the Stock and Bond Connect, it's actually been significantly increasing in the last few years, partly because some of the Chinese assets have been included in the global indexes, and also because of the pickup in yield and the diversification benefit of having Chinese assets. So we do see this momentum intensifying in the next few years, and Hong Kong will be the place, the conduit for international investors to do that. But the last few years probably is a little more about capital flowing into China through Hong Kong. But if you look at the new Connect schemes, the southbound leg of Bond Connect and also the Wealth Connect, they're also about capital coming out of China to invest in global products. And this is actually something new. It's the reverse flow. And I think this flow will gradually increase in the coming years instead of just one way. And this implies that there is a lot of opportunities for both financial intermediaries and also asset managers who are based here. So I think the China opportunity that supports Hong Kong as an international financial center is simply compelling. But like you said, as an international financial center, we should look beyond just one element or one factor that we can rely on. We need also to work hard to get us at the forefront of the other global trends that will shape the future of finance. You mentioned too, sustainable finance and also technology. And these are exactly the 2 things that the development arm of the HKMA is focusing on. Maybe we can talk about green later, but let me spend a few minutes on technology that you asked. We announced recently our FinTech 2025 strategy. Basically, we've already almost all done with our FinTech 1.0 strategy with the rollout of several schemes like the faster payment schemes, the virtual banks, and the new API systems, etc. So we've been thinking about what we want to do next in our FinTech journey. And our core mission in thinking about that is really to get the banks, large or small, in Hong Kong to use technology to deliver more efficient and, importantly, fair financial services to all consumers. So with that in mind, we're basically going down two tracks. One track is to get the banks to really adopt technology to improve their services. So we've got a broad range of initiatives, RegTech adoption, a tech baseline assessment exercise, our use of SupTech, etc. But in doing that, we need also to do the second track, which is to provide the support infrastructure for the banks. And here, at the center of that is to build a data infrastructure that banks can use when they move on to, for example, AI-driven or data-driven credit scoring for the SMEs and for the corporates. And with that infrastructure built, we very much hope that banks can actually use alternative data instead of just collateral to lend to the SMEs, thereby fulfilling the objective that we have in terms of financial inclusion. And so that's broadly the various tracks that we're on in building Hong Kong as an international financial center. And since we've touched on the issue of financial inclusion, you mentioned that in the AER, you actually have a chapter on inequality and the role of central banks in this subject. And in the last few years, we've seen COVID, which induced recession, which actually hits quite hard on the working population. We've seen low interest rates, which get asset prices higher, maybe thereby increasing the wealth divide. And with that kind of backdrop, Agustín, what do you think, to what extent do you think central banks should take account of the issue of inequality in their monetary policy process without undermining their independence? Because traditionally, income distribution is in the area of fiscal and structural policies. Agustín, please.
Yes, thank you. Thank you very much, Eddie, for this question, and thank you for your very, very good response, very illustrative response to my previous question. I mean, I would say the following. I mean, you are absolutely right that income distribution and wealth distribution is a result of structural policies and the structure of the economy. Now, in the last, I would say, 15 years, given the development of the global economy, central banks have been pushed into doing very, I would say, unconventional policies. And those policies tend to act through interest rates and through asset prices. And that has led some to raise the issue that in implementing, let's say, these policies of low for long, how are they going to impact income distribution? We have to recognize that in the short and medium term, yes, this type of policies affect both income and wealth inequality. It tends in the margin to make it a little bit worse. Now, does this mean that monetary policy should not do its work according to its mandate? And I would say the key message of our chapter is that notwithstanding the impact on income inequality, the short-term impact on income inequality, for medium and long-term inequality, the best that central banks can do is to take the actions to fulfill their mandates. As a matter of fact, what we document in the chapter is that the main aspects that have affected the income distribution in the medium and long term in many, many countries are very high inflations, are long periods of unemployment and recessions, and financial stability episodes. Now, if we think what is the mandate of central banks, well, it's precisely to avoid high inflation, to preserve financial stability, and if the economy is run into trouble from the point of view of economic activity and unemployment, is to really support the economies and stabilize them. So let me put it in this way. In the short term, the monetary medicine can have some impact on income distribution, but it terms to be transitory, and more than anything, monetary policy helps to establish the conditions for there to be a better income distribution. Now, this doesn't mean that central banks should ignore the income distribution aspects. I think it has to certainly fulfill its main mandate in terms of monetary policy. But as we say in the chapter, there are other hats that central banks wear. And in that respect, they can implement some of the instruments they have. For example, in financial regulation and supervision, by the implementation of some macroprudential policies. And here I have to say that HKMA has been in the lead, facilitating financial inclusion, financial literacy, all what central banks have been doing in that respect has been tremendously fruitful for giving more opportunities, more access to broad sectors of the society, and this has tended to improve income distribution. So, I mean, monetary policy has to do what it has to do, and this is also a wake-up call for other policies to do what they have to do to improve income distribution.
Thanks very much, Agustín. Well, let me now turn to the third chapter of the AER, which is the chapter that I like the most. It's about CBDC. In that chapter, BIS actually has done quite a lot of analysis into the CBDC issues. And in that chapter, you analyze a lot of trade-off that the central bank has to face in thinking about the CBDC design. For example, whether it should be a direct issuance by the central bank for resilience, for reliability, etc., or whether it should be a two-tier structure through the commercial banks for flexibility and innovation. And there are many other trade-offs involved. So what do you think will be the kind of global CBDC landscape going forward, in your view? Agustín?
Well, I can understand why this you like this chapter the most. I have to say, I also feel very, very, very enthusiastic about that chapter. And as a matter of fact, I can tell to this audience that in the history of our annual economic report, this has been the chapter that has had by far the most downloads. So it's a real, it seems to be a real success. I mean, basically what we do in this chapter, and in a way this helps answer your question, is that, as you say, we have been working on this for quite some time. This is in line of all the effort of the BIS to be at the frontier of technology and innovation, and precisely that's why we opened the innovation centers in hotspots like Hong Kong to try to precisely be as a leader in this respect, and I think that we have done a tremendous job. But so in this chapter, because we have done a few other chapters on CBDC, or we have presented other publications, we move from the question of what is a CBDC, how could the CBDC look like, and more into what are the steps needed to implement this idea. I mean, as a matter of fact, it's still, with very few exceptions, there are very few cases where this has been implemented. There are some countries that are tremendously advanced, like the PBOC in China, mainland China, and obviously everybody is looking into that. But I think that for pretty much all the countries, there are key issues that need to be addressed to make a CBDC strategy work. And one has to do with the relationship with commercial banks and the financial system. It's needless to say, CBDC could imply some competition But I think what would be of the essence is that this CBDC becomes a win-win situation. I think that central banks will need of commercial banks and other payment service providers to make the CBDC idea a reality. Therefore, I think it's very, very important for central banks to try to figure out what would be the best, I would say, interaction with their commercial banks, mostly because one, we have to realize that central banks do not have today the infrastructure or the capacity to have the interface with individuals. And therefore, I think that's an aspect that we need to keep in mind. And they are payment service providers, they are commercial banks that have that interface. So I think that we have to work with them. So from an implementation point of view, I think it will be key to establish that relationship. And also from a financial stability point of view, we need to be very, very mindful about the potential impact that the CBDC could have on commercial banks, and therefore the idea here is to enter into a win-win relationship where there would be plenty of competition, there would be innovation, the central bank could move its ideas forward, and society will win all around. I think that's one key aspect. The other aspect that central banks need to look into is the aspect of data and privacy. That is a key issue. That's a societal question. That's something that probably goes beyond the space of the central bank. That's a broader question, and it certainly has I would say a theoretical or a technical underpinning, because I think what will be key in CBDC is to be able to map in an unfallingly way the relationship between some registers and an individual, and that mapping cannot lend itself for mistakes. But of course, that implies that a lot of information is being produced there. Who will have control on the information, who will have access for the information is very, 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 very important. More than anything also because now the only central bank money that central banks offer to the people are completely anonymous. And that's the case of cash, no? So that's why this is an important debate. We obviously don't have the answer. There is no one size fits all, but that's something that central banks and the societies of their countries will need to address very, very carefully. And the third dimension that we address in this chapter is the international relation, the international facet of CBDC. We have an historical opportunity now that all central banks are thinking on precisely creating an alternative representation of central bank money, a more technologically advanced representation of central bank money. And therefore we can start from scratch and design a system where the international payments could be done seamlessly. And here Hong Kong is at the forefront, and I have to say we're working very hard with you, with the Hong Kong Monetary Authority in our Hong Kong Innovation Hub, Innovation Center, together with other central banks in trying to develop what it has been called MCBDC, which is to provide technical facilities for there to be seamless operations in central bank currency across borders. So I think this delineates I would say some of the key aspects of a to-do list there is more things to be done. Again, I want to underline, there is no one size fits all. Each country has a different need, it has a different financial system, but I think there are some universal aspects that will need to be taken care of, and that's what we have been pointing out here. And I'm sure that we will continue working on this. And again, we expect HKMA to continue to be at the lead on this. And I think we continue to expect to learn from HKMA. So may I ask you, Eddie, can you share with us your more recent thinking on the development in Hong Kong on CBDC and more broadly in the region?
Thank you. We actually started the CBDC study very much at the same time as you do, back 3-4 years ago. But we started with the wholesale CBDC idea, which is one that Agustín was talking about, how to use blockchain and CBDC to facilitate cross-border payment, which has been a long-standing pain point in international banking. We started that project some 2-3 years ago together with the Bank of Thailand. Phase 1 involved working out a network corridor type of prototype. We did that in a very short time. And then phase 2 is more about commercialization of the prototype. And here we have invited PBOC, the Central Bank of UAE, and BIS very graciously has got the Innovation Center to become the coordinator. So it's now a 5-party project. And we're now getting into phase 2. It's going on very smoothly. And we expect that the results of phase 2 will come out in a few months' time. That will involve the architectural design, the use case, the legal issues, practical challenges, etc. And if that is successful, you should see cross-border payments that it can be done actually real-time across 4 jurisdictions, 24/7, with the FX link settled real-time on a PVP basis. And if that is successful, it will actually go a long way in advancing a cross-border payment solution for everybody. And phase 3, if phase 2 is successful, then we will move into phase 3 towards the end of the year. It will be about the participating entities, including the stock exchanges in Hong Kong and Bangkok, and also 30 banks around the 4 jurisdictions to put real transactions onto the platform. And if phase 3 proves to be successful, we can actually commercialize it. And we do hope that there will be wider scale implementation around the region so that at least for the regional cross-border flows, it will be much cheaper and faster. So that's actually the aim that we're having. As to retail CBDC, which is actually the bulk of the discussion in the CBDC chapter in AER, we have actually started a project. It's called Project Aurum, together with the BIS Innovation Center, to look at the technical aspects of having a 2-tier retail CBDC structure. But the more difficult and important part is actually the policy trade-off, the ones that is described by Agustín just a while now. For example, privacy, resilience, things like that. We have internally in the HKMA initiated a study to look at all those aspects. And we expect that there should be some initial results in about 12 months' time. For now, we actually have an open mind. So we want to complete the study first. We've got just a few minutes left, but I can't leave green finance out. So let me now turn to green finance. You have, the BIS has been at the center of the central bank's green finance efforts, and you've organized, more recently, the Green Swan Conference with great discussions there. So, Agustín, what do you think how do you think central banks should incorporate climate resilience into their monetary policy process, whether there are other things that central banks should get themselves more actively involved in climate resilience?
Yes, thank you very much, Eddie, and thank you very much for your previous response. I mean, we have to, I think it's important to start this discussion by establishing that central banks do not have and should not claim to have, I would say, magic wand to address climate change. Climate change is an extremely difficult issue, a real challenge, the key that this generation is facing. Central banks should try to look into how can they help in the pursuit of solutions to the problematic that the climate change implies, but we should not claim to be the answer to the whole problem. So I think that prudency is important at the outset. Now, that doesn't mean that there is not a lot that central banks can do. And I think that, again, there are many aspects that we can do, and a lot has been done, again, by the HKMA. I think one is to work on all, I would say, the infrastructure that is needed to have much better green financing. And here, I'm not necessarily thinking on hardware or software, but I mean, just the infrastructure to make financial transactions work. What is important is data and this information for people to be willing to invest more in green bonds and to provide better financing for green projects. Is very, very important to have more accurate information to develop a framework into how that information is mapped into the end result of having a very precise impact on improving issues related to climate change. So data is very important. Regulation is very important. Also, I would say it could have financial implications. So running stress tests for assessing how climate change could affect the resiliency of financial institutions will be of the essence. And in addition, many central banks conduct some monetary policy operations. Let's say, for example, asset purchases of corporate bonds and so on, that is predicated based on the monetary needs that the central bank have to respond to. But in that process, it can also look into how into providing, I would say, a stimulus into green corporations. So I think these asset purchases can be greened. And also in the diversification of the international reserves. And this is an aspect also where here the BIS has been doing a lot of work in trying to provide central banks vehicles for them to invest in green bonds in an effective way. I think that if central banks tend to green their international reserves, they will be making a very important contribution towards the whole effort.
Thank you very much.
Let me not forget, because we're also working on this in the center, through technology, and I would say this would be part of the infrastructure I was referring. We're also collaborating jointly towards this effort.
Thank you very much, Agustín. So I suggested we stop here, and I'll invite Casey here to get questions both from you who are here, and also through the online platform from the audience overseas.
Yes, thank you, Mr. Yue, thank you, Mr. Carstens. Quite a lot of subjects have been covered. I'm not intending to summarize anything, but I think most audiences around the world are probably, attracted to, some really concrete progress in terms of the CBR CBDC project. Let's wait for the, the results that probably would have quite far-ranging consequences. We have quite a number of questions, both from the audience and some from the online audience as well. Let's cover some of them. Our first question comes from Mr. David Liao, Co-Chief Executive of HSBC Asia Pacific. Mr. Liao, please.
Well, thank you very much, and thank you, Agustín, for a very comprehensive sharing. It's a very all-encompassing report and much to think about. The CBDC is capturing a lot of our imagination, and you've, I think, quite well laid out some of the framework of consideration. I think personally, I think particularly the international connectivity is still something thinking about, and just really want to sort of dwell deeper in your thoughts about whether the CBDC can really be created in isolation, or is there a common denominator amongst different markets and different currencies that needs to weave together to really be purposeful beyond one market. Invariably, that also drives competition or notions of competition, either perhaps between different markets, but also driving, perhaps agitating non-central bank driven medium ICO, different digitized assets. How do you see that landscape playing through and coming, sort of developing? Thank you.
Yes, thank you very much for the question. As I said in my remarks, I think that we were facing a unique historical opportunity to redesign international payments. I mean, we have in our community, we have been working very, very hard to make payments more effective. And well, commercial banks, needless to say, play a very, very important role in this respect. But still, I mean, today we face a situation where if you want to send the remittances from one place to another, in average, it costs you 7% of the face value of the payment as commissions or different costs. And that certainly is unacceptable. And it's not only the 7%, but it's also that sometimes it takes days or weeks to deliver those payments. Now the technology is there, and I think it is really our obligation to try to apply that technology to make payments far more efficient. Now, it's not only a technological issue, it's also an issue of making compatible different financial structures, different regulatory regimes, in such a way that these payments comply with the requirements of the different jurisdictions, and at the same time to make them really efficient. I think that we're continuing the move towards a very globalized world, and therefore these international payments are of the essence. So my own point of view is that we have the obligation to work on this and to be very effective on this. And I think technology is a major promise. And again, what we need to do is to take advantage for the financial infrastructure that is out there, but also invite new innovators into the game so that there is more competition, there is more effectiveness. It shouldn't be a process that excludes players. It should be a process where in an environment of competition, of open competition, it invites new players into the market, and in that way, we will end up with a much more solid result. So I'll stop here.
Thank you.
And maybe I should add a little in that. You talk about individual jurisdictions having their own CBDCs, how to make them sort of connected. One is that I thought interoperability is important. And second is that I thought BIS actually has a very unique position here. And this is exactly why the MCBDC project will benefit a lot from the coordination role of the BIS. The BIS Innovation Hub has got different CBDC projects going on. I won't say coordination because it's a pretty new area where you want different pilots to be done. But once the pilots are mature, then there could be certain collaboration, coordination that can be done among central banks. And the BIS will be a great place for central banks to talk about this. So it's really about getting a platform for central banks to talk to each other so that cross-border payments in future can be made on a CBDC platform of some kind.
Yeah, thank you. I think this opens up another opportunity for us to work together again. The next question is from Ms. Gaily Olivier, CEO, Asia Pacific, Société Générale.
Thank you very much. Good afternoon. I was going to extend maybe the discussion on, again, CBDC, but I think we have discussed a lot about it, so let me shift maybe to green financing. Do you see a role for the central banks and BIS on supporting the economy in its transition in the decarbonation journey, and supporting the banks in supporting also the financing towards more decarbonation?
Well, again, definitely I think that we have to find ways to do this, I would say, in line with our mandates and the priorities that our mandates imply. For the transition, I think what will be very important is for central banks, again, to help to provide infrastructure to have more green financing, and I would say better decision-making by banks, and in that way also to have an adequate regulatory environment. And for all of us into the future, I think what would be very important is to be able to assess the risks that the climate change implies. And for that, the work that we might do in terms of having better stress tests and having better resiliency of banks would be of the essence. I would say that also what is very important is that we help the development of the markets for sustainable finance. I mean, if we think into the enormous amounts of investments that are needed to have an adequate transition and to be well suited to face climate change, a very large percentage of the investments will have to come from the private sector. We have to mobilize huge amounts of financial resources, and the issue is how can we do it the best possible way to achieve the end result, which is a safe financial transactions, productive decisions, and at the same time pitch in a major way towards climate change. Central banks are at the center of this equation, and we certainly want to play a very constructive role.
Maybe I should add a little using Hong Kong MA's own experience. Of course, getting banks to incorporate climate resilience into the risk management framework is important. But additionally, like Agustín said, we are also trying to help build the infrastructure or the necessary support infrastructure. And this, we actually focus on two things. One is build the talent pool. And second is build the data platform that's needed for assessing climate risk. These two will be relevant to banks in their climate assessment, but also relevant in building the marketplace for green bond market, for example. And the third area that we are working on is actually together with the government to promote awareness and to promote participation by the market in green areas. One is, like Agustín said, being a reserve manager, we have fully integrated ESG into our own investments, thereby having a direct impact. But we're also helping the government launched quite an ambitious green bond program that actually has rolled out already 2 tranches of green bond, providing a demonstration effect to the market, thereby sort of bringing the marketplace into some vibrancy. And very shortly, we will also help the government issue a retail tranche so that the public at large will actually be supporting the transition by actually investing into the green finance area. So I think apart from looking at the climate resilience of banks, there are other things like in infrastructure that central banks can do, but of course it depends on the mandate of individual central banks.
Thank you. Our next question is from Ms. Mary Hyun, CEO, Hong Kong, Taiwan, and Macau Standard Chartered.
Thank you, thank you. Thank you, Agustín, for the very insightful sharing. I think the colleagues have covered a lot on the CBDC and green. Perhaps I have a different question. When we first heard from you in the AoF, that was the time when we haven't yet had virtual bank in Hong Kong. We talked about we were going to have. Today, we have already got 8 virtual banks in Hong Kong. And the number is not small from Hong Kong perspective. We have got 8. So I want to hear from your insights. What must we think about the policies and capabilities that must be in place for us to help nurture these virtual banks whilst keeping a very transformative environment for the traditional banks to pursue the opportunities that Eddie has mentioned? Thank you.
Thank you. Well, you know, I have to be very humble here and honest. We are studying very much this issue of virtual banking. As a matter of fact, the Hong Kong office has a project underway on virtual banking, working with the HKMA on a paper. And I have to say that I can give you an answer that is intellectually sound, but it really would not have the richness of the answer that what Eddie could give you, because I would say if there is an area where HKMA is a leader, is here. So I have to be very honest, and I just cannot think I have the capacity to give a better answer than Eddie. As a matter of fact, I also want to hear that because I will learn from Eddie. So Eddie, allow me to pass you the floor.
Okay, I'll try. Well, it's a new thing. It's a kind of untested model. It's only been introduced. They only launched their services just last year, and they're just starting out with their services. But for now, we're actually seeing some encouraging signs that the original objectives are being met. Things like innovation, new customer experience, and some form of financial inclusion. These are the things that we want to see for virtual banks to at least catalyze or stimulate, and we are seeing some of that. But going forward, I think it will actually be quite a challenge for many virtual banks. In terms of, for example, the simplest thing, the basic question is how to create the revenue growth and create a path of profitability for themselves. And also, you mentioned about the talent war that we're having in the Hong Kong banking scene, how to get the right talent, both having tech and fin skills, and also retaining them. And this is something that we are actually helping, working with the academia, the universities, to produce more tech pipeline so that they can actually have the right people in order for them to excel in their business. But I think what's actually more important is the data infrastructure that I referred to earlier. Because for them to come up with innovative solutions, especially in the SME area, they need data in order for them to do the credit scoring using alternative methods instead of just using collateral. And the commercial data interchange that we're creating will allow them to have access to multiple sources of data of the related clients with their consent, of course. And this data can range from things like POS terminal data, online turnover, trade declarations, quite a rich content that they can use. And hopefully, with that data and the technology that they might try to experiment, we can see a lot more SME financing without collateral in future. And in fact, I've also read the draft paper that the Asian office has produced. They use the term information capital. I think it's actually a succinct description of how banking will be conducted in future. It's not really just about your equity capital. It's about how you use data and information in the new digital age to advance your business. And having them the right data platform is, I think, is almost like the blood to the human body. And this is something that we will help in terms of having the infrastructure for the virtual banks to fly and to innovate.
Thank you, Eddie. Time is running out. Let's have a final question from Mr. Xun Yu, Chief Executive of the Bank of China, Hong Kong. Mr. Xun.
Hi, thank you. Thank you, Eddie and Agustín, for your informative conversation. I have a more general question to both of you. While I was in university, I was told by the professor that the central bank should remain independent, taking care of the inflation, instead of being responsible for the overall economic performance. But obviously, it was no longer true in today's world. It seems that central banks are competing with each other to inject the liquidity into the market. So we are not talking about the price policy normalization. But actually, we are in a very unprecedented situation nowadays with ample, if not too much, liquidity. So when we talk about policy normalization, what's the biggest challenge or risk to the global financial system from your perspective? Thank you.
Well, thank you very much for this question. I mean, let me say that that central banks, again, have been acting based on their mandate. They have followed their mandate very well. They have been, but at the same time, they really have to think outside the normal box because the challenge is huge. I mean, as I mentioned at the outset of my presentation, the pandemic represented a challenge that we haven't seen before. In terms of its magnitude, of its depth, the potential of doing major economic and financial damage to the world economy. Therefore, central banks really needed to deploy their instruments in ways that only before had been seen in the context of wars. Now, again, I think central banks have been doing this with full command of their instruments and with being in full command of the decision-making progress. I don't think at this stage independence of the central, I can say categorically that the independence of central banks have not been affected by this. Yes, we at the same time, we need to talk about normalization, about how can we go out of this extraordinary situation. And I would say that the key aspect and the key challenge that we face, in different countries face, is how can we do this normalization in a coordinated fashion. I think that as fiscal and monetary policy have been very coordinated in the way into providing relief to the global economy, they also have to be extremely coordinated, gradual, well-choreographed exit. Because what we don't need right now is to have a situation in which we have cliff effects and the recovery is aborted. So I think that this coordination will be extremely important, taking into account the different institutional settings that there exist for the conduct of fiscal and monetary policy.
And I will echo what Agustín talked about in terms of the need for coordination. And again, BIS is the perfect place for central banks to do that. But looking at it from the Asian perspective, in terms of policy normalization rates, I think there are two. One is the uneven recovery between the West and the emerging markets, including Asia. You can see that in the US, Europe, and the UK. The vaccination rates are very high. The economy seems to be recovering fast. But if you look at Asia, the vaccination rates are typically much lower. And we are worried that the whole economic recovery in Asia will actually lag behind that of the advanced economies. And if they start to taper or even raise rates, there will be global tightening of global monetary conditions. And if Asia by that time is still struggling with infections, with low vaccinations, then this tightening of monetary conditions will put a further hit on their economies when they're still struggling. So that's one worry. The second worry is that when there is normalization, the last time that we experienced that was 2013 when there was this taper tantrum. So if this time round, will taper tantrum reappear? I think that's the worry of most of the Asian economies. But in our discussions in the central bank forums, I thought the common view is that this time around, there's a lot of, there are different things that play out in a different way. For example, the Fed is communicating a lot better this time, a lot more about their exit, about their expectations. So the market is much better prepared. Asia has got much better economic fundamentals than in the past. The current account is largely imbalanced, some are in surplus. The buffers that we have, whether you're talking about the banking system buffer and the FX reserve around Asia, is a lot stronger. So this time round, many are expecting that the hit from tapering will not be as large. But there could be things that we don't see now, whether there could be hidden leverage in the system that can amplify risk when tapering comes. So we need to be prepared. And that's actually the message that we're having, especially in our regional central bank forum. So that is normalization. The risk of normalization is something that we are watching.
Good. Many thanks again, Mr. Carstens and Mr. Yue. We have come to the end of this dialogue. Many thanks also to all the participants of this event online as well as at this forum. Goodbye.
Thank you very much.